Good morning, everyone. A second here. I think our YouTube friends get into the channel. Okay, markets are up. Actually, a little bit, a titch here. Let's see where they go. It's been quite a nice rally since the October low. And you can see on the weekly chart, it was just a retest of this low area with a bottoming tail. Really simple kind of setup. Maybe not so easy though, right? This part of the year, this middle part of the year, and I guess most of this part of this year, has been a lot of jiggles and ups and downs and back and forths within trading ranges, and markets finally broke out. And so now at all-time highs and everything in an uptrend, of course, the question becomes, when is it going to end? Well, you know, everybody, not everybody, but many have their projections based on wave counts and fib extensions and channels and so on and so forth. And, you know, you're thinking trying to catch the top. Well, who doesn't want to? But I think it's kind of a ridiculous thing, and probably somewhat what just holds you back, probably because of larger gains rather than managing it intelligently. That saying at some point taking some money off of the table and raising stops and so on, because historically things just go a lot further than we believe they would, and to some aspect, you know, in our own mind should. Nonetheless, in my experience over the years is that it definitely goes further than we would think is the norm, right? So anyway, pretty simple trend following method that we do is to say, if it extends itself from a prior swing, meaning multiple bars up in a row, start trailing prior bars lows. And from there, these little PLs here, swing lows, and this is on this time frame, start trailing swing lows. You know, as they get a swing here and it starts moving up, what goes on in between here and here, and especially if we were to go down to a 5-minute chart, which could give us some heart palpitations as an intraday trader, is really pretty meaningless, you know, from higher time frames. But we're all susceptible to doing that because we want to get the top price and, of course, not get caught in any downdrafts. But anyway, we're into this seasonal bullish period. It doesn't mean we won't have down days, especially if some other China hiccup comes out and so on and so forth. But, you know, I don't think hedge fund managers and money managers and such want to curb their gains. I think they'd rather extend the exceptional gains, which pretty much, you know, a lot of it came at the beginning of the year, right down here, and the run up into April, and then, you know, from April into the end of October was just pretty much a sideways mess all over. So there's a little thought there if you've got swings that are acting well, and there's other stuff, plenty of stuff that probably isn't acting so well that doesn't look like this, but it's usually the case. Anyway, just so trailing bar by bar and pivots, it works. Now, before we get to the futures and other markets, so we take a look at the transports, which need to join this party. And I think, just based on this seasonal bullish period that may be going into next week, and of course next month, it may be the transports that begin to bring up the rear and outperform. So take a peek at those stocks in that index and related sectors, because I think this is what has to happen, because if they don't break out of here and push up to new all-time highs, of course, that's going to be kind of a fly in the ointment to say, well, the transports aren't participating, the Dow theory concept. And so we're still getting this bullish price action here where it's consolidating at resistance. It hasn't broken out yet. And as it came up, it'll probably stall here. But I keep that in mind going into next week, because the big mover has had the same pattern before it became the big mover, which was the Russell. It's not exact, but we're not into exactness. We're into big picture patterns. We're not into, okay, it's got to be this kind of a bar and this kind of a name. That is limiting. It's to understand the big picture, so to speak. Is like, oh, whatever it looks like over here, it's not going down, right? It's going sideways at resistance, and that is bullish. But of course, it's got to break out, right? It could break down, but we didn't have this kind of price action of 3 weeks going sideways over there. We had big messy stuff, breakout failures and reversals that you could see here in April, and so on. So now you still got until the end of Friday. All right, we've got a wide range, right? It's wider in range than these bars. Expansion range breaking out of these highs, which supports a belief, right? You could say belief or bias, but a belief that this is going to go higher into this void, right? We've talked about this multiple times over the last few weeks. So now we've gotten the breakout. We've got the wide range bar on the daily time frame, and now part of our factory work analysis is to say, look, if this is really bullish, it's going to stay in the upper third. Ideally, it never closes below the halfway mark. Sometimes, and I'm not suggesting this is what's going to happen, just giving you historical interpretation of the pattern. Sometimes you get a poke below the halfway mark. That's a tail, but we don't want to see the close below there, right? Because ideally, with a bar like this, there are buyers lurking below, and they step up on dips and then eventually push it higher into the void. So we'll see how that all plays out. So Russell should continue to go higher. We want to see the transports break out of here. And I'm just reading some of the comments there. We want to see the transports join the party with the others. So spiders looking good, right? We already checked that out, break up to new all-time highs. There's no whole numbers to think about right here. It's gotten through, obviously, 300. So we don't have, a subjective reference point like a whole number that could come into play. So that all looks good, like it could go higher. And we've got our major support point down here. Now that prices have cleared this prior swing high, which it was supposed to do, right? It could have turned into an M top, right? It could have turned it because it was so close. I talked about that earlier in the week, that we have to be aware of the fact that the prior high is so close by here. And that's the pattern that can turn into an M top, but it's exceeded it and closed above it. So this now becomes our major support point, that if prices break below it, it breaks the uptrend on this time frame, not the weekly, but definitely on the daily. SPX. SPX. So 3135. 3135. Kind of tight, but 3135. Whew. It should be support, Paul, because you've got a retest over here and it went higher. So from an intraday point of view, and again, with the focus being a spread with 0 days to expiration, yes, it should hold this area and stay above. So selling spreads below that area with some comfort should work out, right? And if the market stays really bullish. Yeah, so you're saying, I'd like 3130 as well, but yeah, the further you get away, right, the better. And can you imagine if there was actually some premium below this level where we had two levels to protect us on that spread? Doesn't happen that often, but if we had two levels of protection, that would even be more desirable. All right. So yeah, that's your initial level there. And so we'll get to the futures and see what they're when we get a clearer picture there. Things are kind of grinding down a little bit towards support as we see the cues here. But so 30, 205.20, 205.20. So they're still above here. They went up to 205.60-ish. Right up at here. And now they're kind of pulling back. So maybe they'll pull back into this area here, being aware of overnight support could be where buyers want to step up. They should want to step up there, right? Thinking prices are going to go higher. S&P futures, you could see a little narrow bar, really not much, multiple days up. They took out the high. This is our concept of a greater than 100% retracement that says, based on historical patterns, look for a slowing in momentum when prices move from support and take out the prior high. Slowing in momentum does not mean the end of the trend. It just means you could get a narrow range bar. It could turn into a red bar. We don't know. But it's just a way of putting together a thought building process, right? And that's what we call our chapters or modules and courses, thought building process, because as traders what's the word? We're not system traders, so to speak. I can't remember the word, but anyway, we look at the charts, we look at market internals. We basically are the computer that's between our ears, and we're processing information. So if we don't have a trading plan with rules to guide our thought process, we become susceptible to our emotions. And this is where, we call them mirage trading comes into place. Whereas the end of the day, you're like, how the hell did I do that? It's nothing I would have done in the piece of just looking at the charts without the market moving. So thought building process here says after a greater than 100% retracement, expectation is for a stall in momentum. Now we're into this seasonal period here. Maybe it could just continue to blast off, but we're in front of the holiday tomorrow. The volume is probably going to be sucked dry after lunchtime here. And by the way, MT Live today at 12 o'clock. I did drop the link in YouTube, and for some that are coming in late, there it is. And in the room here, some of you don't get the emails or open them. There it is in the chat. So some type of stolen momentum, some type of little retracement or sideways action would be typical. Right? Another narrow range bar so far. Prices are backing off. You can see the futures here coming down to, on the 15-minute chart, a major support level. Same process, smaller time frame, same thought pattern. Right? Prices have now retraced deeply into this move up, which is a little short-term sign of weakness. Now, buyers, and notice that topping tail, that little breakout failure there where buyers tried to buy the turn there and it failed. So we're getting some indecision here, and we'll see if this level holds. So that's the first reference point here to see what they're going to do, buyers stepping up there. NYM. Even a little bit of a narrower range. And look at this. Well, I guess a little profit taking going on here initially as prices coming down to their respective support levels. And this little range right there. Remember, YM, if you go back and a few days ago when we were looking at this pattern where prices were starting to break out and they were going sideways, I think it was right there. I think it was clearer on the ES. It was right here. And YM looked like it had the best void to move higher, but in reality, it turned out to be the underperformer. Still moved up to new all-time highs, and now it's all the way back down to this level over here, and we got this little let's call it minor topping tail. And you could see the concept here of the greater than 100% retracement and the stalling momentum, which I know it's early, but momentum is stalling right on key with the analysis of what typically happens, right? Major support way down here. So let's view this as a wide range bar. In a sense, we've got multiple bars moving up. So while we have, let's just make a new line. Let me just drag this down. Let's just kind of spitball it and just say, well, even with whole numbers, ideally in a bullish trend, let's just say 28,000 should be viable. The prices get down there. So let's just look to the left. So we take an arbitrary whole number, right? And say, where is that relative to any support and resistance? Does it make sense? Right? So we can look at a level, something like that and say, does that make sense? And lo and behold, it makes a lot of sense because we got this big swing low down there at that whole number. It's the same thing like looking at a moving average. Moving average moves around based on whatever you set it to or whatever kind, simple, exponential, weighted, whatever. So it moves around. It's subjective as a reference point. A whole number is subjective as a reference point. But when we can quantify it by seeing a swing like that, say, yes, that is very meaningful as a reference point. Russell, like, beautiful breakout. Stalled yesterday, was actually underperforming yesterday as other markets moved up. It was just dead in the water, but it was the big mover the day before. So let's give it a little, slack here and say, Yoga, you were deserving it as a little bit more of a rest, but it looks like it can go higher. Oil down a little bit here, just consolidating, no big deal. Bonds down here a little bit, consolidating at resistance, no big deal. Gold got turned around yesterday. And so kind of watching to see if this red bar, as it is right now, can get turned around here. So markets moved up a little, gold came down. They've kind of had this inverse relationship going on here, coming down to support. We'll see if they can get turned around here and form this W that it started yesterday. Silver slopping around too, actually outperforming a little bit because it's not down to the bottom of yesterday's range. And mostly green, as you can see here, which trading pre-market, which Dan will go over. There was some positive news on Amazon. Look at how that came off of the low. Boom. All right, Dan, I left you with 10 minutes.
All right, very good. All our opens are fine. So well, actually, I'll just show you two of them here because the weekly options trader, we only have two open positions. We have shop, 338. So we're getting $1.80 gap up. And Greg likes shoplifting, he told us yesterday. So we have a directional and a put spread. And we have NVIDIA put spread that expires tomorrow. And we have the 215s gapping up a little bit here, bucking change. And we're just in holding our breath mode that it holds above the short strike. Boeing was a pending put spread over this red bar. It did not trigger. Now it's gapping down. So we'll just cancel it for now. AVX, 20 bucks, big old bullish gap. But here, look at the weekly. It's way the heck up here. Just eyeball it. I don't even need numbers here. And it's funny when people ask you at happy hour or whatever, oh, what did the Dow close at? Okay, I have no friggin' idea. I don't care about numbers. I care about pictures. So just imagine a gap from this pattern. It's excessive. Move on. It's too big. 765, that's a bearish gap. This looks like penny stock toy. I don't trade those. Same here. Garbage. BTI, it's an ADR. Gapping up to 39.50. Now that's a bullish gap. Hey, look at the monthly. I know it's an ADR, which is gappy because it's a foreign stock. But this is, we got to keep this on our list as a higher low W bottom price void. Target 45 to 50. That looks good. Put that in this window. So for a core trade, I would make an exception to trade something gappy if it had a big target. Vive 166, it's a big gap. Were we looking at this 2 days ago? That was a bullish gap 2 days ago. Wow. 9, this one's gapping at $10. It's bullish. I would never swing that, but if you can get a bullish setup on a 5 or 15, it'd be fine for a day trade. Keys 107.40, bullish gap, but no pattern, no price void. Hewlett Packard 2040. Okay, that's a 30-minute high candidate. It's sloppy, you know, target 21 maybe is all. Dell, he trades very sloppy too. It's a bearish gap down here. That'd be a bear call credit spread setup if you can get any juice up there. Box 1740 also trades sloppy, but it's a bullish gap. We'll leave it on the list. Raven. I can't tell what you're doing. You're a big mess. I'm just going to delete you because I'm trying to keep the focus low, smaller at the open so you don't get distracted. UAA got an upgrade. 1865, that would be a put spread candidate. McGraw, guess $18. It's a $1 gap down. It was a bullish bottoming pattern on daily, weekly. We'll keep it on the list. Deere getting whacked on earnings, 169. I have it in the upper right window here. That's a 30-minute low candidate. That could go to 165. Why not? I always like looking at the major cousins. Cat, Deere, Home Depot, Lowe's, Coke, Pepsi, you know the drill. 144.75. That's nothing to do with cousin. VMware 169-ish. No pattern. We'll come back to it. Autodesk 169. All right, this is a bear call credit spread candidate. That was another beautiful gapper this day. So gapping down after extended. I'll put that in this window, bottom right. So 30-minute low, we sell an out of the money call spread. Housing stocks, remember they've been on a tear. They pulled back, bottomed here, nice close. McGraw, this is a put spread candidate. Same with DRI. These are not earnings, but I just found them. Put spread candidate. CCK, we gave this in last night's letter over the high. I have one print here up 2 and change. If that is real, then it's going to invalidate our long FLT. We tried selling puts. Was it this one? Whatever I gave to say yeah, it was this one. I didn't get filled. I was trying to do the 290, 280 for 75 cents, and I did not get filled. Someone in the room asked about Cuervo Gold yesterday. I think it might have been Jason, and that looks good. That's a 1, 2, 3. I like it. A lot of air below if it or the market starts selling off, but for a swing trade, holding incredibly well. Greg mentioned Twilio. It's a call spread candidate under yesterday's low. Ross had a nice close breakout. I looked for put on that, and there was no juice, so we have to watch it. For directional, McGraw, you mentioned this yesterday, and I liked it. Zulu Sierra, DKS, maybe if we get a 1, 2, 3, I mentioned yesterday, pre-market on this gap, it was a bullish gap. And I said on the monthly, target 50. That definitely looks like it's very possible. Burl also, this was one of my favorite gappers yesterday, but this is what kept me out of it. I have a 2-step process, bullish gap, and then it sets up nice. And this was all over the place pre-market here. But then when the market opened, it got itself into gear. But we love wide range bars from multi-month consolidation. That's beautiful. JPM, I like yesterday's bottoming tail. This is still on my long list. And it's now gapping over. Greg, what do you think about JP Morgan? Yeah, keep that on the list. And we're going to be doing an MT live next week on bottoming and topping tails. Yesterday's bottoming tail makes this better. McGraw likes to say more better, but yes. Greg's Coffee Shop, we missed it. Plug I have on my core long list based on daily, weekly, monthly, all in agreement. Hey, Alex, what was that one we were talking about a week or so ago that you were buying calls on in January, speculating on a big move? Yeah, 2 days ago, Plug. No, it was a smaller stock. I mean, I'm not questioning that wasn't one of them, but it's not the one I was thinking about. It was and I remember I watched it for a few days. It had a little bull flag, and then it just couldn't get going, and I stopped watching it. Tilray's still a dog. Microsoft was strong yesterday. Look at Roku up $3. Whoa, look at Roku. This is a candidate for a put spread for Friday. 157. I'm looking right now. That's a nice little gap and a consolidation. Greg, we got to put that one in our retracements. MT Live. That's amazing at retracements. 157.50 for Friday is only 18 cents. There's no juice. You would have to go out to next week. Newer. TWOW. Oh, I don't like that. I'm stalled. Oh, that was a nice breakout this week. I like that on a pullback.